Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Monday, the 28th of July. I'm Caroline Hepke in London.
And I'm Stephen Carroll in Brussels. Coming up today, the United States and the European Union strike a deal setting tariffs on the EU at 15%. But many details are left to be worked out.
Keir Starmer heads to the US President's Scottish golf course for talks on trade and diplomacy.
Plus, still holding the faith, plunging long-dated UK bonds become a cult trade for yield-chasing investors.
Let's start with a roundup of our top stories.
The United States and the European Union have agreed a deal that will see 15% tariffs on most EU imports into the US. The deal staves off an escalation in hostilities in the world's biggest trading relationship, but many details are still to be ironed out. European Commission President Ursula von der Leyen announced the deal alongside President Trump during his trip to Scotland.
We have a trade deal between the two largest economies in the world. And it's a big deal, it's a huge deal. It will bring stability, it will bring predictability. That's very important for our businesses on both sides of the Atlantic. It's 15% tariffs across the board, all inclusive.
But Ursula von der Leyen and the US President appeared to differ on some key details. Donald Trump said the deal did not include pharmaceuticals, but officials on both sides later indicated the sector was included in the 15% rate. And while the US President said there would be no change to the 50% tariff on steel and aluminium products, von der Leyen said that metals duties will be cut and a quota system will be put in place. Details were also scant on an EU commitment to purchase $750 billion in American energy products and invest $600 billion in the United States.
US and Chinese officials are meeting in Sweden today to extend their trade truce beyond its August deadline. It will be the third meeting in less than 3 months for Chinese Vice Premier He Lifeng and US Treasury Secretary Scott Bessent, who will discuss how long the current tariff arrangement can be prolonged. The news comes after President Trump confirmed yesterday that dozens of other countries will hear details about their US levies this week.
They'll probably receive a letter of clarification or a confirmation type letter, which will go out sometime during this week, prior to August 1st. And the tariffs will start being paid by those countries prior to August, on August 1st and beyond.
US President Donald Trump speaking there. American levies on China are well above those for other nations, making bilateral trade more expensive. Any breakthrough in discussions could set the stage for the US president to meet Xi Jinping in person after the Chinese leader invited him to visit last month.
The British Prime Minister Keir Starmer will join President Trump today in Scotland to finalise their trade deal and press for a ceasefire in Gaza. The two are set to meet in Turnberry on the west coast of Scotland, where the President is visiting one of his golf courses. While some elements of the UK-US trade agreement reached in May have taken effect, the President's pledge to remove tariffs on a quota of steel imports, currently at 25%, remains problematic. The Prime Minister is also hoping to secure a carve-out from potential pharmaceutical tariffs.
Israel increased aid distribution to Gaza over the weekend in an effort to defuse a growing international outcry over hunger in the Palestinian enclave. The UN World Food Programme has warned for weeks that 2.1 million people in the Gaza Strip face crisis levels of food insecurity. Dozens of organisations have warned of mass starvation in the territory. Israel's Prime Minister Benjamin Netanyahu has disputed their account.
The UN's making excuses and lies about the state of Israel. It says we're not allowed to enter with humanitarian supplies. We are allowing them. There are secured roads. There have been all along. But it is official. There will be no more excuses.
Benjamin Netanyahu speaking there via a translator on Sunday as the Israeli army suspended some military operations against Hamas to facilitate UN relief convoys arriving from Gaza and Egypt. The IDF also restored electricity to a desalination plant in Gaza for the first time since March.
In corporate news, Samsung will produce semiconductors for Tesla in a $16.5 billion deal lasting until 2033. The contract is a win for South Korea's largest company, which has been steadily losing ground in chip manufacturing. According to Bloomberg Intelligence, the agreement could boost Samsung's foundry sales by up to 10% annually. In a social media post, Tesla CEO Elon Musk said the strategic importance of the deal was hard to overstate.
The England women's football team have retained their European Cup title, beating Spain in a penalty shootout. Chloe Kelly converted the spot kick to seal victory for the Lionesses in Basel after Spain missed 3 in a row. It is the first time an England team has won a major trophy on foreign soil. Let's have a listen to the historic winning moment.
Chloe Kelly to retain England's title. Kelly steps up, it's a hop, skip and a jump, and she slams it into the back of the net. England are European champions once again.
The Prime Minister Keir Starmer praised the victory, saying the Lionesses have once again captured the hearts of the nation. A special reception for the team will take place at 10 Downing Street this afternoon, with a victory parade through central London on Tuesday.
And those are your top stories. Those are your top stories. On the markets this morning, we are looking at European stock futures pointing higher after the news of that US-EU deal. Eurostoxx 50 futures up by 1%. DAX futures are 1% higher as well. On Wall Street, S&P E-minis are up by 0.5%. Not much movement in currency markets. The euro just a touch stronger against the dollar at 117.47. The Bloomberg dollar spot index is flat. The 10-year Treasury yield is up a basis point, just shy of 4.4%. And just one company's earnings that we've had out this morning from Heineken, seeing a decline in beer volumes unexpectedly, according to what analysts had been expecting from the brewer. Retailer disputes across Europe dragging on sales and limiting the company's ability to take advantage of the summer heatwave. The Dutch beer reporting a 0.4% fall in volumes during the second quarter.
Well, in a moment, we're going to bring you more on what we know and what we don't know about that EU-US tariff deal, plus the much-hyped London bond trade that is testing investors' patience. But before we get to those big stories, something else has caught our eye. Have you been to Rome lately, Stephen? Have you seen the enormous building site that is the Aquarium of Rome?
No, but I'm fascinated by this idea because, I mean, as if there wasn't enough to see in Rome already, this is supposed to be the kind of next generation of attraction to bring people to somewhere that, as we know, already attracts huge numbers of tourists. The aquarium's been under construction for more than 2 decades. It's meant to house more than 100 marine species. It's already cost more than €100 million. But according to the latest corporate filings, it needs at least another €20 million to emerge from the financial distress that it's found itself in. So it's sort of become symbolic of how it's really difficult to deliver landmark building projects in modern times, even with the great ambitions there was.
Yes, I mean, I can understand you saying, you know, it's an indoor attraction versus all of the amazing outdoor architectural attractions that there are in Rome. But yes, I mean, it is so difficult to actually deliver massive building projects. I mean, the Italian banks who were sort of behind this have actually written off 95% of their loan exposure. There's been so much restructuring. Anyway, Bloomberg's been looking at the company filings that we've seen. There's a legal dispute with the local authorities, which also, you know, is a perennial issue when it comes to building. If you kind of lose the relationship with the local leadership, then it also becomes very hard to deliver something.
Yeah, indeed, and some great pictures as well of this particular area in Rome as well, which their aquarium is located, meant to be part of a renewal effort going on there too. It's a great piece. You'll find a link to it in our podcast show notes. Well, let's bring you more on the top story this morning. The deal agreed between the European Union and the United States on trade. Lower tariffs generally, but key questions remaining over certain sectors and other commitments. Our Brussels Bureau Chief Suzanne Lynch was in Scotland. She joins us this morning for more. Suzanne, good morning. The headline then, a 15% tariff, but there are several areas which appear quite unclear. What do we and don't we know this Monday morning?
Good morning, Stephen. Yes, I mean, look, a lot of people from the EU side are saying this is a breakthrough. They've managed to lock in that 15%. Obviously, Donald Trump had threatened a higher 30%, and we had got signalled from last week that they were closing in on a 15% tariff rate. But as you say, there are a lot of unknowns. I think it's crucial to say we haven't seen a document yet. We haven't seen a text with any of the details. Now, officials are saying that is forthcoming in the next few days. And that is going to, we will be poring over that to see some of the details on that. I think one of the key questions remained around pharmaceuticals. That's a huge export for the European Union to the United States. And there was some mixed messaging on this from the president first, but then later on, we did get confirmation from both Ursula von der Leyen and senior US administration officials that pharmaceuticals were covered by the 15% rate. However, von der Leyen had said that perhaps there will be further action by Donald Trump at some point later. She said, whatever the discussions later by the president of the US, that's on a different sheet of paper, she said. So we do know that this Section 232 investigation is ongoing into pharmaceuticals. So we're still trying to get clarity on exactly what the implications of that will be on this 15% rate that they agreed.
It's a small point, but I think it's illustrative. There was a table between Donald Trump and Ursula von der Leyen with some flowers on it. To me, this read as the coolness and the distance with which the EU has tried to handle this in some ways. Is it a good deal? Is it going to go down well with member states?
Yeah, it's funny. The body language always is so interesting to watch here between, I mean, you could not get two more different people in terms of personality. Ursula von der Leyen was very poised, very quiet spoken in that meeting and said very little. And I think that's the way the EU wanted it. Now, there is a debate about whether the EU, it's quite late coming to the table with this deal with the United States, and perhaps it could have, played a stronger hand earlier in the process. Obviously, the EU is a very big trading bloc. This is a hugely important trading relationship, and it could have and would have, we are told, hit back. But you are right in that this is a question now. Will EU member states go for this? Now, the way the choreography worked yesterday was that before the meeting took place, European Commission President Ursula von der Leyen, her team briefed EU ambassadors who happened to be on a trip to Denmark, to Greenland, in fact. They were briefed on what they believed was going to be the content of the deal. But crucially, this morning at 8:30 a.m., there is another meeting of those ambassadors, a hybrid meeting. And that's going to be key to watch. We're going to be watching this closely. What kind of reception the deal gets. Now, obviously, the way this works, the EU knew it had sign-off effectively to go ahead and make this. But now, of course, as we've been discussing, the devil will be in the detail. So let's see what happens with that meeting this morning. We're also expecting a lot of messaging from the European Commission this morning. We are expecting some kind of press conference by the EU Trade Commissioner, Maroš Šefčovič. He was also in the room in those negotiations yesterday that lasted just over an hour between von der Leyen and Trump. They weren't on their own. They had a team, 5 on each side in total. So we'll be looking forward and waiting to hear what he says and whether he can shed more light on exactly what was agreed and what remains to be ironed out.
OK, Suzanne, thank you very much. Our Brussels Bureau Chief, Suzanne Lynch. And just looking at the latest reaction we've had from France's Europe Minister this morning, talking about this being not an agreement that's not an equilibrium for the two sides, saying that it has the advantage of bringing temporary stability, but that it is an unbalanced agreement. That's what Benjamin Haddad has been posting on social media this morning, but indicating there, as Suzanne pointed to, where things have to go next within the internal EU processes on this deal as well.
Absolutely. So that on the EU-US tariff agreement. Right, let's pivot, though, to a story here in the UK. A big bet from the pandemic era that is turning out actually to be a losing one. A UK bond maturing in 2061, a niche ultra-long bond, has the potential to deliver big returns in the event of a recession, but that's not really how it's turned out. And our Bloomberg reporter, Greg Ritchie, has been writing about this. Greg, good morning. So look, firstly, why did people invest in this long bond in the first place? Why was it so popular?
Good morning. Well, there's two main reasons for why it attracted so many private investors. The first is that it's fallen so far in price. So it's issued back in May 2020 at around £100, and it's fallen all the way down to 25. So the play is pretty simple. If it can return back to its pandemic levels, we're talking about a rally of 300%, and that's very alluring to many people. The other reason is the tax benefits. So because of a quirk in UK tax policy, gilts are exempt from capital gains tax. So rather than betting on a meme stock or a cryptocurrency, for example, where there'll be a lot of tax if there is any capital gains, this gilt is exempt from that. And because of the bulk of the gains will come from the capital gains rather than any kind of interest income, because the coupon on the bond is very low, it's something that became very fashionable for people to bet on.
But the notes have plunged, so how does it compare now?
Well, I think what's happened over the last year or so is people are realizing that long bonds globally are doing very badly, and that while there might be a recession in the coming years, it might not be similar to a recession from previous decades. It might be a stagflationary recession, for example, where there's a lot of concerns around inflation, and therefore long bond yields don't drop in the same way that we've seen in previous recessions. There's also concerns that fiscal jitters that we've seen globally, but particularly concentrated in the UK, will persist. And therefore, again, if there is an economic slowdown, the long end of the curve won't recover in the same way it has. For that reason, people are kind of becoming concerned about their bet, and I'm not so sure that it will perform in the way that they hope.
And you spoke to, obviously, a number of investors on this. Some do still think that it could deliver. I suppose, why are they holding out hope?
Yeah, I've spoken to a few dozen investors, a lot of them bankers and investors in the city, looking to put down their tax bill and have a bet on this. The sentiment I'm getting is that they don't want to sell at these rates. They don't want to realise a large capital loss. At the same time, they're not so positive on this. So in previous gilt sell-offs, what they'd be telling me is that they'd be buying the dip, and they'd often be boasting about buying the dip, thinking it'd be a great trade. Now that we're seeing this bond fall further in the last few weeks, I'm not getting that same sentiment. They're not looking to add to their exposure. At the same time, they're not looking to reverse in their exposure. It's something that they're just going to hold on to and hope it comes off one day, but they're becoming increasingly pessimistic about that.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.